Welcome to the Trading Edge. In today's video, we'll be exploring the fundamentals of stock market investing. Maybe you're interested in learning how to start investing or simply want to gain a better understanding of stocks. Either way, you've come to the right place. Let's delve right into it. So, let's talk about the stock market. What exactly is it? Well, the stock market is basically a marketplace where individuals can buy and sell shares of different companies. It's like a giant trading platform for stocks. When you decide to buy a share, you're essentially purchasing a small portion of that company, and guess what? This means you get to benefit from the company's growth. How? Well, when the share price goes up, your investment becomes more valuable. Awesome, right? But that's not all. Some companies also pay dividends to their shareholders, which means you can earn extra income on top of the price appreciation. Now let's talk about some popular stock markets out there. The New York Stock Exchange, known as NYSE, is one of the most well-known stock exchanges in the world. It's located in New York City and has a long and prestigious history. Many big-name companies, both national and international, have their stocks traded on this exchange. Another famous stock market is the NASDAQ. It's also located in the United States and is home to numerous technology-based companies. NASDAQ has gained quite a reputation as the go-to exchange for tech stocks. So, if you're interested in investing in stocks, these are just a couple of the popular stock exchanges to consider. Remember, the stock market offers a unique opportunity to become a partial owner of a company and potentially benefit from its success. Happy investing! Why should you invest in stocks? Well, stocks offer an incredible opportunity to grow your wealth in the long run. Over history, stocks have consistently delivered higher returns compared to other investment options such as savings accounts or bonds. By investing in stocks, you can pave the way towards building substantial wealth, saving for retirement, and ultimately achieving your financial goals. The power of compounding and long-term growth is what makes investing in stocks so attractive. As you invest in stocks and hold on to them for the long haul, your money has the potential to grow exponentially. This phenomenon of compounding allows you to earn returns not only on your initial investment, but also on any earnings generated over time. With every passing year, your investment and its resulting returns can snowball into something much larger. Moreover, the long-term growth potential of stocks is another reason to consider this form of investment. While stock prices may fluctuate in the short term, over longer periods, they have demonstrated a consistent upward trajectory. This means that by staying invested in stocks for the long term, you can ride out any temporary market downturns and benefit from the overall growth of the market. Investing in stocks is not just about increasing your wealth, it is also about securing a comfortable retirement. By starting early and consistently investing in stocks, you can build a substantial nest egg that will support you during your golden years. Whether you dream of traveling the world, pursuing your hobbies, or simply enjoying a worry-free retirement, investing in stocks can help make those dreams a reality. So why invest in stocks? The answer is clear. By harnessing the power of compounding and long-term growth, investing in stocks has the potential to unlock doors to financial success. Don't miss out on the opportunity to build wealth, save for retirement, and achieve your financial goals. Start investing in stocks today and watch your money grow over time. Are you new to investing? Understanding some key concepts is crucial for beginners. Let's start with shares. These are units of ownership in a company, giving you a stake in its success. Next, dividends. these are the profits distributed. To shareholders, a reward for owning shares in the company. When it comes to stocks, there are growth stocks and value stocks. Growth stocks are focused on high growth potential but may not pay dividends, while value stocks are stable and often pay dividends. Lastly, your risk tolerance. This is the level of risk you're comfortable with, and it directly affects your choice of investments. Understanding these concepts will set you on the right path as you begin your investment journey. When it comes to investing in stocks, there are different strategies you can employ to grow your wealth. Let's take a look at some of the options available to you. One way to invest in stocks is by purchasing individual stocks. By buying shares of specific companies, you have the potential for high rewards, but also bear the risk associated with it. It is important to research and choose the right companies to increase your chances of success. Another option is investing in exchange-traded funds, ETFs. ETFs offer a mix of stocks and are often diversified across various sectors or themes. This allows you to spread your investments and reduce risk. ETFs are a popular choice for investors looking for a balanced approach to stock investing. For those who prefer a more hands-off investment approach, mutual funds are an ideal option. Managed by professionals, mutual funds are a collection of stocks chosen by fund managers. This provides you with the expertise of investment professionals and is suitable for those who want to take a more passive role in managing their investments. Now, if you're a beginner in stock investing, here are some key tips to help you get started. First, start small. Begin with an amount you're comfortable with and gradually increase your investments as you gain confidence and knowledge. Next, it's important to diversify your investments. Spread your investments across different stocks, sectors, or even asset classes to reduce risk. This way, if one investment underperforms, you have others to balance it out. Thinking long-term is crucial when it comes to stock investing. Stocks are best suited for long-term growth, allowing you to ride out market fluctuations and benefit from the power of compounding over time. Consider using dollar cost averaging as a strategy. Invest a fixed amount regularly rather than trying to time the market. This helps you to average out the cost of your investments and reduce the impact of short-term volatility. Lastly, don't let emotions drive your investment decisions. Stay calm during market ups and downs, as emotional trading can lead to poor decisions. Instead, base your investment choices on solid research and a long-term strategy. Now let's take a look at some common mistakes that new investors often make. One such mistake is panic selling. It's crucial to resist the urge to sell your investments out of fear during market downturns. Stick to your long-term strategy, and remember that markets tend to recover over time. Another mistake is chasing hype. Avoid following trends or investing in hot stocks without proper research. It's essential to have a thorough understanding of the companies you are investing in and their potential for long-term growth. Lastly, neglecting diversification can be a risky move. Putting all your money into one stock or sector exposes you to a higher level of risk. By diversifying your investments, you spread your risk and increase your chances of success. In conclusion, investing in stocks offers various options, including individual stocks, ETFs, and mutual funds. As a beginner, remember to start small. Diversify your investments, think long-term, use dollar cost averaging, and avoid letting emotions guide your decisions. Additionally, be cautious of common mistakes, such as panic selling, chasing hype, and neglecting diversification. By following these tips and avoiding these mistakes, you can navigate the stock market with confidence and increase your chances of success. Are you ready to start investing? It's simple. All you need is a brokerage account. There are many online brokers that are beginner-friendly, with low fees and helpful resources. Once your account is set up, you can start small with either a diversified ETF or a handful of individual stocks. Remember, stock investing is a journey, not a sprint. Start small, stay informed, and focus on the long term. Thanks for watching. If you found this video helpful, hit the like button and subscribe for more content on investing and financial tips. And don't forget to subscribe and follow for more content. Keep learning and growing your investment knowledge. Have questions about investing? Drop them in the comments, and I'll be happy to help. See you in the next video.